and welcome to Market Domination Overtime. Stocks closing higher here after that cooler than expected November CPI print. Our very own Inez Ferre joins us with the latest market moves. Inez.
Josh, stocks closing higher, though off the highs of the session. There seems to be a little bit of selling in those last few minutes of trading. Taking a look at the Dow, ended up 0.1%. The NASDAQ Composite ending up 1.4%, and the S&P 500 ending up about 0.8%. But there you see some of the selling pressure that came in right near the end. Looking under the hood at where we're at with sectors, or let's take a look at the NASDAQ 100, because we saw the NASDAQ being the best performer today. The Mag 7 all in green territory. You saw Tesla up 3%, Meta, Amazon, Alphabet, Nvidia up almost 2%. But the big standout, of course, today has been Micron, that has sort of put the wheels back on the AI trade. If there were some jitters earlier this week, well, today we saw some of those jitters disappear after Micron's strong earnings, up more than 10% for Micron, leading the chip sector higher. I do want to mention, though, what we have been seeing with crypto, pressure on the crypto space. Take a look at Bitcoin. Bitcoin right now just above 84,000. It was around 86 this afternoon. So it really has not been able to, or earlier this morning, up to 88, it has not been able to hold these levels. We've seen this over and over with some of these sessions when it comes to Bitcoin, when it comes to ETH as well, just coming down in later trading, in the afternoon trading. And then just taking a look at commodities, where we've ended up there with oil up slightly today, Brent crude also just slightly unchanged, but just taking a look at the gold futures easing a bit from yesterday, and also silver easing off its all-time highs. Josh.
All right, thank you, Inez. Well, the clock ticking toward President Trump's announcement of the next Fed chair. In his address to the nation, the president reiterating his key criteria for the next Fed chair.
Now, soon announce our next chairman of the Federal Reserve, someone who believes in lower interest rates by a lot.
Fed correspondent Jennifer Schonberger is breaking down the battle, Kevin versus Kevin. Jen.
Hey there, Josh. Yep, Kevin versus Kevin. The race for the next Fed chair tightening between former Fed Governor Kevin Warsh and National Economic Council Director Kevin Hassett. Investors' bets on who will get that job fluctuating a lot. Just today, earlier, according to Polymarket, odds were that Warsh would secure the nomination narrowly over Hassett, but this afternoon, Hassett seemingly securing the lead with odds of better than 50%. Now, we know that both gents do favor lower interest rates, something that the president says needs to be the case for whoever the next Fed chair is going to be. Now, when it comes to Warsh, the president has said that he is at the top of his list, and we have a general idea of what kind of Fed chair Warsh would make. Warsh has said that the Fed really needs to throw out the window this notion of stagnation, or stagflation rather, because he believes that AI is going to boost productivity and push down inflation, paving the way for lower rates. He doesn't believe that if you have a strong economy, you have to have high rates. He says you can still have lower rates in such a scenario. Now, he also favors a smaller balance sheet. Perhaps the one thing that Warsh has going for him right now is that he is not that close to the president, just as Kevin Hassett is. Turning to Hassett, he is also one for lower rates, but there is a narrative that is circulating right now that he is close to the president, and when push comes to shove, he may not do what the economy needs. He may keep rates lower, even if that's not what the economy requires, essentially questioning how independent Hassett would be from the White House. Hassett, for his part, has pushed back on that notion this week, brushing off questions about those concerns, saying that, quote, the idea that being close to the president and serving the president will disqualify someone for any job just doesn't make any sense to me. Hassett has also called for more transparency at the Fed, saying that we need to really understand what's going on in the institution. Now, yesterday, Wednesday, the president did interview Fed Governor Chris Waller, who is also in the running for Fed chair. Of course, Polymarket handicapping his odds at much, much lower than the two Kevins. Of course, it ultimately comes down to President Trump's decision, and trying to actually handicap that and get inside the president's head has proven to be a tough task historically. Josh?
For sure. Jen, thank you. Well, the Consumer Price Index showing inflation cooled in November, but some say the data doesn't tell the whole story. Joining me now is Aditya Bave, BofA Securities Senior U.S. Economist. Aditya, it is good to see you. So let's start on that CPI report, Aditya. Lighter than expected. Some do have questions, though. They don't sound like they have a ton of confidence in this, Aditya. I'll be honest. Pantheon, for example, telling clients data collection issues mean trend will only be clear in December's data. Then here's my buddy, RSM economist Joe Brusuelas. Joe saying, and I quote Aditya, dude, that was one flawed report. So what do you think, Aditya? You agree with Joe? Was that flawed?
Good afternoon. Thanks for having me on. It does look like there were some data collection issues with the October and November CPI data. The decline in inflation was very, very large. And if you look at some of the categories, the drops were a little bit too large to be plausible. And that's basically the way markets have responded. Honestly, if you had moderately higher inflation that was still below consensus, I think markets would have priced in a lower Fed path. But they just looked at this and they said, this doesn't seem plausible, and let's just move on to the next one.
Some economists, Aditya, I've seen them make this case. I'm interested to get your take. They sort of frame it like, you know, against a backdrop, they'll say, where the labor market's cooling and oil prices are tumbling and housing rental inflation is slowing, as are prices. Why are we focused and worried about inflation? How do you answer that?
I think you want to pay some attention to inflation just because we've overshot for the last 5 years. And cumulative price changes matter. That's very clear in consumer confidence. That's very clear in this very broad narrative around affordability. So while inflation might be cooling, we still have to be worried about price levels. And so maybe we need to get back to 2% or maybe temporarily undershoot in order to get folks a little bit less worried about affordability, as they rightfully are right now.
So Aditya, what does the trajectory of inflation look like to you? When you're talking to your clients, you know, what does it look like 6 months, 12 months from now? What do you model?
So the way we're thinking about inflation is that the tariffs will continue to trickle through. They have passed through. They haven't passed through as fast as some folks were expecting, but there's about a 30 to 50 basis point impact from the tariffs in inflation so far. I think that's the way we see it, and I think that's pretty close to the way the Fed sees it as well. That should continue through at least the first half of next year. As you get into the second half of next year, the tariffs slowly kind of roll off the year-over-year rate. But underlying inflation for us is stuck a little bit above the Fed's target, call it 2.2 to 2.5%. And going forward, with the Fed having lowered rates to levels that we think are close to neutral, and with fiscal policy turning easier, we don't really see that impulse to bring underlying inflation back down to target. So we'll probably remain stuck a few tenths above target.
Aditya, a broader point. I want your take on this post on X from Diane Swank, smart economist like you, Aditya. This caught my attention. Q3 GDP report, Diane says. She says here, we could see gains crossing 4%, stronger than the 3.8 in the second quarter. Diane says AI and wealth generating, still posting gains, she says, along with a narrowing trade deficit. Is that what you potentially see, Aditya, a 4 handle?
We have a high 2 handle, potentially a low 3 handle on third quarter GDP growth. The uncertainty around that comes from the inventory data, which are a little bit hard to project, and the equipment investment data as well. So do you expect some payback for the big jump that you got in the first half or not? But whether it's kind of what we're expecting or closer to what Diane seems to be expecting, I think the point is the same, that you're going to get very strong GDP growth in the third quarter. And unlike the second quarter, where you could attribute that to some distortions in the data, I think this is going to be real strength in GDP, which should continue into next year. So we have an above consensus forecast for GDP next year. We're looking for 2.4% growth.
Finally, Aditya, I have to ask, because it is top of mind for investors right now, the next Fed chair, right? Waller, Warsh, Hassett, Aditya? You know, is there a name you prefer? Is there a name you think the markets prefer, Aditya?
I think what matters more than who the next Fed chair is the question of what the committee will look like. So will Lisa Cook be around or not? Will Chair Powell remain on the board as a governor? Will there be some other turnover on the FOMC? I think those questions are more important than who the next Fed chair will be, because it's pretty clear at this point that the person that's selected is going to want lower rates. And the big question for markets right now is, will the committee really allow them to go there? And there's two ways to think about that. There could be a scenario where the economy weakens significantly further from here because the labor market keeps deteriorating. And then this whole conversation will be moot, because everyone will want the same thing. They'll want to move rates down to 2% or lower. But there's also a world in which our forecasts are correct, and then it's going to be much harder to bring rates down. And that's where I think the composition of the FOMC will really matter.
Aditya, great to see you, as always. Thank you.
Thank you.
Turning now to FedEx as it releases its second quarter results. Let's get you to those numbers. Q2 EPS, $4.82. The street was at $4.12, so that's a beat. I'm looking at Q2 revenue, $23.5 billion versus an estimate of $22.8 billion. So we have beats there on the bottom and the top. I'm just looking for operating margins. There they are. Q2 operating margins, 6.9. The estimate was 6.07. Importantly, let's look ahead as well in terms of what FedEx is guiding for. The full year, they're calling for adjusted EPS, $17.80 to $19. They had seen $17.20 to $19. For FedEx, listen, in focus for investors, you see the stock popping about 1.5% here, at least initially. We know cost reductions are in focus. We know the spinoff of its freight business is also in focus. There, FedEx saying here in a statement, the planned spinoff of FedEx Freight into a new publicly traded company, they say, continues to advance. They say it is on track to be executed on June 1st, 2026. Of course, broader themes investors, when they look at this name, always interested in the health of the economy, the health of the consumer. Tariffs will be in focus as well. The stock has been interesting. Year to date, heading into this print, the stock had really basically been flat, though it was up about 25% since the company last reported results in September, popping a bit here, at least initially in the after hours. That conference call starts at 5:30 p.m. Eastern. Well, President Trump signed an executive order to expedite the rescheduling of marijuana from Schedule 1 to the less severe Schedule 3 classification.
I want to emphasize that the order I am about to sign is not the legalization, or it doesn't legalize marijuana in any way, shape, or form, and in no way sanctions its use as a recreational drug. It has nothing to do with it. Facts compel the federal government to recognize that marijuana can be legitimate in terms of medical applications when carefully administered in some cases.
We're seeing shares of pot stocks lower after initially surging ahead on the news. Our very own John Hyland joins us now with more. John, what do we need to know?
So today the president, as you saw, was surrounded by doctors, really touting the medical use of this. So what he's doing is he's expediting through an executive order, something that's already been on pause that would bring about the reclassification of marijuana from Schedule 1 to Schedule 3. So Schedule 1 places marijuana on the same level as heroin and LSD. Schedule 3 would put it at a controlled substance that has legitimate medical use along the lines of ketamine or Tylenol with codeine. So this is a major legislative win for the industry overall. It's something they've been lobbying for years, but it's not said and done, which is why potentially you are seeing stocks pulling back today. Mm-hmm. It just expedites a process that ultimately went into place during the Biden administration and has been on pause this year.
So big headline, big news, a big moment, but you kind of suggesting this, what are the hurdles that are left there?
So right now, the executive order would expedite the process that would bring about the DEA, the HHS, and the DOJ to put a formal hearing process in terms of the laws that would go into place for this. Now, this also does nothing for the industry when it comes to federal legislation for cannabis. So that's something that is still years away from ever being federally mandated. And what it would also do is it would bring in more pharmaceutical companies into the business that could provide some more competition against the existing cannabis players. It would also bring the FDA in terms of companies having to spend more to try to bring new products to market. So ultimately there are hurdles, and you're seeing that also play out within the GOP itself and lawmakers coming out pushing back against Trump. after touting this.
Finally, just the pot stocks generally, John, what's performance been like?
So overall, they've underperformed the major averages for years. This past week, you did see them surging. They're giving up some of those gains today. And they're hoping that this will lead to broader adoption. I mean, if this does go through in the coming months in 2026, it would lead to better tax incentives for these companies, which would shore up their balance sheets a little bit. There is hope out there, but I think right now it's a wait and see moment for the industry if they can actually get this over the hump.
All right, John, thank you, appreciate it. Coming up, we get Nike earnings on the other side of the break. Don't go anywhere. Nike is out with its second quarter results moments ago. Let's take a look at those numbers. Q2 EPS, I see 53 cents. I don't see a clean compare on the bottom line just yet. The top line, though, Q2 revenue, importantly, $12.4 billion. The street was closer to $12.2 billion, so it looks like a beat on there. Q2 gross margins, there they are, 40.6%. That is smack in line with what Wall Street had estimated. Q2 Greater China EBIT looks like $191 million. The street per Bloomberg was closer to around $335 million. Inventory, $7.73 billion. Estimate was $7.8 billion. It looks like initially here we're down about 1%. Remember, it was down about 10% this year headed into the print. Most on the street, interestingly, do see that as an opportunity. I'm just looking, nearly 70% of analysts do continue to say Nike is a buy. The average price target per Bloomberg is around 83. I know some analysts, for example, those at Telsey, say yes, early wins on the turnaround efforts here for the CEO, but in their opinion, you still do hear them arguing work to be done to return to profitable, sustainable growth. But initially here, we're down about 1% in after-hours trading. Well, for more on Nike's quarter, let's get to David Swartz, Morningstar Senior Equity Analyst. The results just crossing. What do you make of them, David? What's your initial read?
It looks like it was a small outperformance quarter for Nike, but that's not really surprising at all because Nike almost always beats numbers, even in a difficult quarter like this one. Even though the numbers may be better than expected, this is still a difficult quarter. Nike's growth of 1% is way below Nike's normal level, which is really in the mid to high single digits is what you really expect for Nike. So the company is continuing to struggle, and the margins are well below normal. As you mentioned, the gross margin barely above 40%. Some of that was tariff impact, but it's also because Nike is doing a lot of discounting right now to clear out older merchandise that hasn't been selling well, and that's affecting the selling prices and the margins on those products. And so Nike really is still in a transition phase. The company has been struggling really for the last 2 years. It was really the December 2023 earnings call when you first got a strong indication that things were kind of going badly for Nike when it gave a very disappointing outlook for the calendar year 2024. And so it's really been about 2 years now that Nike has been in a tough situation. And it's been just over 1 year since the company made a CEO change and brought in Elliott Hill. So there really is a transition going on. And the hope is that we start to see stronger results in the second half of the current fiscal year and then into fiscal year 2027.
So we're in this transition period, as you point out, David. I guess my question is that you have CEO Elliott Hill there in charge. He's the man now. Does he have the right game plan in place, David? Does he have the right strategy in place, in your opinion, to return Nike to profitable, sustainable growth?
Yeah, I definitely think so. My fair value estimate on Nike is $104 per share, which is obviously well above the current stock price, but still below the all-time highs. I think that Nike is on the right track by emphasizing its connection to sports, which is really Nike's strongest area. That's what really separates Nike from everybody else. The difficult part for Nike is that there's a lot of other companies that are targeting that same strategy and targeting the same consumers. And some of those competitors are looking pretty good right now. And that has been an issue for Nike for the last couple of years. But Nike has reorganized. They've changed their organization structure from, for example, having men's apparel and women's apparel being separate and instead classifying by sport. so that like men's soccer shoes and men's soccer shirts will be part of the same group. And so, that does make a certain amount of sense because Nike really tries to dress people from head to toe. They want consumers to be wearing Nike shirts and shorts and shoes. They wanted to be wearing everything Nike. That hasn't always been the case. We've seen in recent years that a lot of people have moved on to other brands that have made perhaps more innovative products and maybe more fashionable products. And Nike has lost some share with consumers. They've also lost some shelf and floor space with retailers.
How is Nike, David, navigating the tariff dynamic? What impact is that having on financial results?
Yeah, it comes at a very difficult time for Nike because, as I mentioned, Nike is doing a lot of discounting right now, so it can't always raise prices to offset the tariff cost. The initial shock was that Vietnam got hit with such high tariffs, and Vietnam is Nike's number one sourcing country, and it's especially an important sourcing country for athletic footwear. And those products cannot easily be moved to other countries because it takes quite some years to actually set up those production and supply chain processes. And so those tariffs have affected Nike and they've affected the gross margin. There has been a bit of a delay because the tariffs are put on hold, and then there's been back and forth over what the numbers are going to be. There's still a lot of uncertainty as to even how the tariffs are applied because there's this idea that products actually move between countries, and so it's not entirely clear what tariff is applied to a shoe that may be partly made in China and partly made in Vietnam, for example. But like I said, it comes at a difficult time. We haven't seen the full impact yet because there was some delays, and so it's probably going to continue to affect Nike for the next few quarters at least.
Finally, David, I got to squeeze this last one in here. Elliott Management building a stake of more than $1 billion in Lululemon. Bloomberg noting Elliott has been working with retail exec Jane Nielsen, viewed as a potential CEO candidate. You cover Lululemon, David. What'd you make of those headlines?
Yeah, it's interesting. Jane Nielsen is a strong CEO candidate if it turns out that she is the person that takes that job. We just found out last week that Calvin McDonald is out as CEO at Lululemon. She has had a very strong period of success at Coach and then at Ralph Lauren. It was a bit of a loss when she left Ralph Lauren because she really set that company on a growth track, and the stock's been hitting all-time highs. And the Coach and Ralph Lauren were in worse shape some years ago than Lululemon is. And so I think she would be a strong candidate. Chip Wilson, the founder, also seems to want to be involved in the CEO search. But it looks like they may have somebody that could be acceptable to both the outside shareholders as well as the board of Lululemon.
David, always great to see you. Always appreciate that instant analysis. Thank you, sir.
Thanks.
All right, time now for What to Watch Friday, December 19th. We're going to start off on the earnings front. We're getting some more reports on Friday, including Carnival Cruise, ConAgra, and Lamb Weston. Carnival announced results for the fourth quarter before the markets open. Analysts expecting Carnival to outperform its rivals like Royal Caribbean and Norwegian, with revenue per passenger to grow about 5.3%. Company already reporting that people are booking cruises early and paying more, with nearly half of Carnival's 2026 trips already booked. Moving over to housing, more data coming out on Friday with existing home sales. Economists forecast that number to come in at an annualized rate of 4.15 million for November. That's higher than the October print, signaling that home buyers are still showing up despite higher mortgage rates. And checking in on the consumers, some fresh data coming in on Friday with the final consumer sentiment reading for December. That number expected to rise slightly compared to the prior reading to 53.5, suggesting people feel slightly better about the economy, but confidence still historically low. Well, that's going to do it for today's Market Domination Overtime, but don't go anywhere. On the other side of the break, it's asking for a trend. Stay tuned.